this question is for you and, of course, the rest of the panelists. Without revealing the name of the investor, but who is your largest investor? What type of investor are they? And how did you connect to them? Where did you find them? Or did they find you?
It would be a private investor, not a family office. And like many types of transactions in that space, I came upon him in a golf tournament. So playing golf does have its benefits, even if you're not very good. And so that would be, and then the time element involved. It's an understanding of what it is that you're offering, an understanding of who you're dealing with, and a mutual respect for one another prior to, do you want to see my pitch deck? After all of these years, it's been 31 years in the litigation finance space. The pitch deck component for us is still a work in progress. We have a portfolio of matters to invest in, but the key element is the personal relationship first, and mine happened to start on a golf course.
I love it. So you're better at golf now, right? Correct?
No, I'm actually pretty good in golf, but the key element for that is if your potential person is slicing the ball, you slice it. If they hook the ball, you hook it. So
I love it. Justin.
So my largest investor is also a private investor. To date, they have about $3 million invested with us. Their first investment with us, it actually came out of due diligence. We were both performing due diligence on another investment opportunity we were both looking at. They invested $50,000 in the first deal they did with us. We took it full cycle. They appreciated the way we did business and grew their investments from then, and they're invested in 6 different deals with us now at about $3 million total dollars.
Did they hear about you through a relationship prior, or is this a direct relationship? Like, how do you meet these investors that get to say yes to you and trust you with their investment? So
we were both doing due diligence on an investment opportunity in Texas, a marina investment. Never had met them before that day. We chatted while we were doing the property walkthroughs and kept in touch. And they told me to let them know if we ever had anything going on that they could invest in. So we did, and it's grown to be our largest investor.
I love it. So my takeaway from your share is that we are all being interviewed. When you think you're walking towards the same job, you don't know that person could be the investor or your partner or the company that buys you out or merges with you. So I love that.
Absolutely.
Thank you. Peter?
We don't have one single largest investor. I would say we have a bunch of bigger high net worth. I would say the one thing that we do that helps us accelerate is we do work with a few aggregators, what I would call aggregators. Like they're like unofficial aggregators, but we have about four or five relationships with groups that invest as a pod. So if we have to raise, generally our deals, we're raising about $15 million a deal, and I'll start out with one of them, and they'll bring maybe half the equity or 5 or 6, and that reduces the strain on our equity raise, and that really allows us to do a lot more. So so we're pretty diversified. We're not dependent on any one, but I do try to think about capital raising in chunks.
Where do you meet them?
Always. Like all different types. I mean, I got 25 years of experience in the industry, so I have a bunch of relationships. But I find that every time you do something, it creates a whole bunch of relationships. And I think what you just said about you're always being interviewed is totally true. And the other thing is just the long-term mindset. I mean, many of our investors. I was in New York I was in New York last month, and I had I had $2 million checks written with investors that I first met 15 and 17 years ago. Mm-hmm. And so they had kind of watched the career and never made an investment. And then it just collided. So The staying consistent with your reputation is really, really invaluable.
That is beautiful. Thank you so much. Paul?
Yeah, we, because it's a unique model, it didn't exist. A lot of my sort of friends in various angel groups were laughing at me saying, how can you invest safely in startups? So we relied really on relationships. In my many decades in the chip business, I knew a lot of executives in Japan and China and all over the world. And so we grew organically. We have about 250 investors, about 100 of which agreed to be advisors and get some stock options. And they range from $50K to $1 million. We've raised about $20 million over the 8 years.
Well, I love it. Thank you. Michael?
Yeah, our largest is it's a syndicate of many high net worth individuals. And again, it turned out to be just a really good match that we worked out. They were folks who are subject to high tax rates, and we provided them a really tax sheltered investment. But yeah, it all started, with we were raising a very small seed round just to get going, pay legal fees, pay for registrations, and had a really good convo. Got passed along to one of the people who headed the syndicate, and the rest is history. It just really snowballed from there. I think obviously we matched up the economics, but I think really more importantly we matched up on the values, and they liked what we stood for, and then the rest is history.
I love it. Thank you, Chris.
Our investor base, we have one key anchor investor. That's, of course, our family office. We have an RIA platform. We have a syndicate like you have. We have a bunch of high net worth investors. But one investor in particular is very interesting. It's a multifamily office. Now, they had set up a pooling vehicle 10 or 12 years ago so they could put all their clients into one fund investment. Now, that every year they got to do an audit on that vehicle. They got to do K1s, all these reports. Is very expensive. And when the net asset value gets down that low, it's not worth it. So they wanted us to buy out their interest so they could shut down the vehicle and save all that money. And we did our underwriting, and we came back with 27 cents on the dollar in our underwriting.
I love that you keep looking at Peter.
But that's it. But we're trying to pitch them our fund to invest in our fund. It's just kind of embarrassing to walk back and say, I'm lowballing you at 27 cents for your assets. So what we did is we got them on a Zoom call under an NDA and walked them through our entire detailed underwriting model and showed them step by step how we got to 27 cents for these assets. And by the end of the call, they said two things. One, you got me there. I think we'll take the deal. And number two, can you open your data room so we can analyze your fund for an investment?
I love it. Well, I believe we have 2 more minutes, Miguel, or 3, or 0. We're at 0. Well, sometimes 0 works too. Well, thank you very much. It was a pleasure.
Thank you.
Learning from you all, and thanks for being good sports.
In terms of investors, I'll be in the back if you're interested.
Yes, please be in the back, ask more questions. Sorry we couldn't have more time for the audience. Thank you so much.
Join the Family Office Club by visiting familyoffices.com. We look forward to seeing you at our next live event.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.